My name is James Oluwole David. You're welcome to my YouTube channel, my Instagram page, and my Telegram channel. A lot of people are asking me to talk about risk management or money management in forex trading. I just want to take a little bit of your time, like 2-3 minutes, to explain just one thing for you. How much are you risking per trade? That is number one. How many opportunity are you looking into in the market per day? That is number two. What is your maximum risk per day? That is number three. These three things need to be put into consideration when you are talking about risk management, money management in forex trading. You have $1,000 account. You have 2 opportunities per day that I'm going to try to look for 2 signals or 2 setup in a day. On each setup, how much do you intend to lose? When you have $100,000, for me, I risk 1% of my account, meaning that I risk $10 on every trade to make $30. Okay, I risk $1 to make $30 on every trade, meaning that if in a day I place 2 trades, then I win 1, then I lost 1, meaning that I lost $10 on 1 trade, and on the other trade I made $30. That means I have $20 profits for that day. Did you get the logic now? I have $20 for that trade. Let's assume for today I lost my 2 trades, which means I have lost only $20 of my $1,000. And let's assume tomorrow again I lost 2 trades, which means I've lost another $20 out of the $1,000, which means I've lost $40 in 2 trades, in 2 days and 4 trades, which rarely this doesn't happen. Now, on Wednesday, I got 2 winning trades. Which means on each trade that I won, I made $30. Which means I have made $60 back. If I deduct the $40 from this, I have $20 profits at the end of the 3rd day. And that is how it keeps going. Like I used to tell you, there is no 100% perfect strategy. Every strategy is a good strategy, and every strategy has a losing chances. The point is, how do you risk your money in the market? How do you manage your risk? How did you manage your risk? Some people will have $1,000 account and they will be risking 10% on a trade. When you risk 10% on a trade and you have a losing trade back to back 4 times, that means you have lost 40% of your account. Now, someone that lost 40% of his or her account, we want to take a revenge trade. What do I mean by a revenge trade? When you lose 40% and you saw another trade, you want to cover up this 40% and still make profits. Then you now go into the market with higher lot size. Eventually, it went against you again. Peradventure, you have used more than the lot size you are supposed to use and risk more than what you are supposed to risk. Now add the loss to this 40%. Now your account is already blown. Slow and steady wins the race in forex market. Slow and steady wins the race in forex market. Wait for your setup to materialize. once your setup materialize, prepare yourself against the lot size you are going to use. You can go to, like I told you, babypips.com. You have positioning calculator. In there you have $1,000. You input your $1,000. You have how many percent are you risking? You put it there. It tells you the lot size. Let's do that on the system now and see. Let's get that done on the system now and let us see. Baby Pips calculator, your Baby Pips position calculator. Can you see? Right? Can you see what exactly I'm telling you now? So I have $1,000 account. I have $1,000 account. I'm risking 1% of my account. I have my stop loss to be 15 pips. Whatever your stop loss is, you have your stop loss there. And you have the pair you are trading. I'm trading GBP USD. Then I input it here. Then this tells me that on $1,000 account, I'm expected to use 6.6. Sorry, on $1,000 account, I'm expected to use 0.06, right? Standard lot is 0.06. That is what I'm expected to use. Now, if I use 0.06, it's telling me that I'm only risking 10% off this 1,000. So if I'm risking this 10% of this $1,000, which means I'm risking 1% of this $10,000, which means I am risking just $10 of my account. $10 of my account. Did you get the point? So if I have a winning trade twice, my risk reward, okay, if I'm risking $10, I'm making $30. So if I have a winning trade twice, I have made $60. In this $60, let's assume I have a bad trade tomorrow and I lost my trade, which means I am only losing $10 from the $60 that I have actually made. In overall, I still have a $50 profit. So that is where risk management comes in. What percentage did you risk in the market? How many entries are you giving yourself to have on a daily basis? And what is the maximum risk you want to always take in a day? My maximum risk in a day is 2%. So when I trade the first trade, I have a losing trade. I trade the second trade, I have a losing trade. I don't bother to look for any setup again for that particular day. So this is just the simple logic behind it. Like today, this is what I'm expecting from the market today. I'm expecting the market to actually comes up here, touch my psychological level and my trend line, and give me an M pattern. And probably I'm looking for a short position today. I'm expecting to have something like this. This is already going up. I'm expecting to have something like this. Okay. I'm expecting to have a structure like this. I'm expecting to have a structure like this. If this is actually valid, this is what I'm expecting today. So let's still see how the market is going. This is just 7:32 UK time, so business is just about to resume fully in UK, and I'm actually trading the London section. So let's see how it goes for today. Thank you for watching this video. More pips, more dollar. Catch ya.